Hi, I'm Whitney Espich, the CEO of the MIT Alumni Association, and I hope you enjoy this digital production created for alumni and friends like you.
Hello, and welcome to the MIT Social Entrepreneurship Alumni Group Investor Track webinar. Our topic today is investing in public and private funds, in market rate public and private funds. And let me see if I can. Okay. All right. The mission of our group is, I'm Lisa Brunner-Davis, and I'm the Vice President of SEAG. The mission of our group is to build a community around MIT affiliates and friends that promotes and supports social entrepreneurship and impact investing to build a better world. And we collaborate with other like-minded organizations. This is the last in our webinar series this year on the investor track, where we're going to hear about investing in market rate impact funds. We also have an entrepreneur track webinar, and in May, we will have a webinar on masterclass negotiating terms. We've also co-sponsored webinars with other organizations, such as Career and Impact Investing with the MIT Impact Investing Initiative at Sloan, and Effective Mentoring, which we co-sponsored with MIT Solve and the Miller Center. How to become engaged with us. If you'd like to join us, there are two routes. If you're an MIT alumni or affiliate, you can join through the Infinite Connection at the link located on the screen. Or you can join us through MIT SEAG LinkedIn group and participate in community discussions, post questions, and suggest future programming. So with that, I'm going to, before I introduce today's speakers briefly, I'm going to let you know in terms of logistics, we're going to hear from both speakers and then we're going to take Q&A. So if you have questions, please use the chat function. And our speakers are going to be Matthew Patsky, CEO and Portfolio Manager of Trillium Asset Management, and Shawn Lesser, co-founder and managing partner of Big Path Capital. With that, I'll turn it over to Matthew.
Great. Thank you, Lisa, and honored to be here with you today. I'm just going to open up my screen and share it. So, and I'm not sure, is this, apologies, I'm like, there we go. I think it's up now. So I'm just going to start off by giving you a little bit of background on myself and my history, and then I'm going to go through just sort of an introduction into impact investing and the history and where we're headed and some of the mainstreaming and adoption we've been seeing. But for background, I started my career at Lehman Brothers. I entered Lehman in March of 1984 as a technology analyst, and in 1988, during the E.F. Hutton merger, I was asked to develop a unique view of the consumer space and emerging growth. And while I was doing that, I started incorporating environmental and social impact into the investment process. Shawn, I'm going to ask if you could mute your line just while, because we're getting some background from your line. So thank you. While I was incorporating environmental social, I started to notice a trend of a lot of consumer brands adopting environmental and social objectives as part of their business strategy, and so started to talk about sustainable business strategies and that. And I will share with you the one, sort of telling point for me in my career. I was talking to the assistant director of research at Lehman Brothers, Fred Frankel, and asked him whether I was actually suggesting that we should incorporate environmental, social, and governance across all of our sectors. And he leaned in at the desk and said, "Matt, that's really nice that you care about these issues. If you don't stop, it'll destroy your career." That's telling on so many levels, but it was also just simply culturally so antithetical to the financial services industry at the time to be thoughtful about incorporating environmental and social impact. I ended up continuing to do that as part of my career and ended up at a small investment banking boutique in Boston called Adams, Harkness and Hill. where we really developed it. And through those years, I got to meet a lot of the players, early players in the movement of sustainable and responsible investing. And so just to try to sort of go quickly through what does it mean is socially responsible impact investing, and that's language, obviously terminology that's shifted over time. If we were to go back 30 years ago, we would have referred to it as socially responsible investing, but the intent has not really changed. It's the purpose of incorporating environmental, social, and governance into the investment process to gain additional information and insight along with financial analysis, right? And that's sustainable and responsible impact investing. And that's the sort of broad field we're in. The history, and I'm not going to go through all this, but I just want you to be aware, the concept of investing for profit, but while being conscious about the impacts you're having on community and beyond yourself, has been around for over 1,000 years. We didn't invent impact investing. It's not new. And if we were to look just sort of in the context of the past, 100 plus years in the US, it really was a lot of religious investors that really were first to be actively looking at monitoring and looking at what impacts they were having with their investments. The Quakers starting in the 1700s in the US, the Methodists in the 1800s, but that's kind of the history of it and the movement in the US. First shareholder campaign was launched in 1966 against Kodak, and we don't have time with this presentation to go through all the detail, but the real moment of movement that started to I would say mainstream this whole concept of incorporating environmental and social issues into the investment process really starts with the UN Principles for Responsible Investment, launched in 2006. Trillium was one of the earliest to sign on, but it has now attracted over half of the investable assets globally. And so what that means is asset owners are signing on to a commitment to be thoughtful about the impacts they're having in society and on the environment. And that is causing a requirement that they ask their investment advisors, what are you doing to think about and minimize environmental impact and improve social outcomes with your investment style and portfolio and approach? So every investor is now being asked, asset manager is being asked by the asset owners to explain how they're doing this in a credible way, just to sort of have a snapshot of what the environmental social governance criteria are. And again, don't have time to go through all this, but climate change is obviously very important. And of course, now what is really being highlighted in this crisis of COVID-19 is social. It's providing safety to your worker safety. It's for protecting employees through certainly their health plans and making sure that they have adequate health care. But social is being highlighted at this point in time because we're also seeing a very bifurcated decision we're seeing from companies. Companies are either aggressively moving to lay people off, or they're making very big statements about commitment to their employees through this crisis, right? And so which firms do you want to be invested in the long run? You want to be invested with the ones that are committed to their employees and are not treating their employees as easily disposable, and are really seeing it as one of the assets they need in order to restart their business. And so that's a criteria that's certainly showing itself here and now with this current crisis. Growth in assets that are being managed with the integration of environmental social have been growing very steadily and much faster than other assets, than overall assets. So one of the reasons why it's becoming topical, obviously, is because people are looking at this as a growth area and wanting to understand it better. So, and it is true, this is a much faster growing area of assets than the broad market. What are some of the drivers you should just be aware of? And that is Women are much more likely to be looking at these issues of the impact their money is having on the world than men. Millennials, much more likely. It's an age, the younger you are, is also an issue of people being more conscious and more wanting to understand the impacts of their money. We also have had a campaign for divestment from fossil fuels and reinvestment and advocacy for better outcomes from investors that has been driving a lot of the interest in this space. So just some quick statistics, and that's this is a Morgan Stanley number. 76% of women believe environmental, social, and governance factors are important to making a good investment decision. So just a great statistic to understand, which is that gender, that there's a definite bias for women to want to understand the impacts of the money as they invest. And of course, millennials, we see these statistics. This comes from a US Trust study, and it was 69% of millennials who also agreed that these issues were important. The divestment campaign, largely driven by 350.org and Bill McKibben, who is up at Middlebury, a professor up at Middlebury, really has driven great demand for looking at what impacts are we having on the environment, and can we do this with a divested portfolio from fossil fuels? And just to, yes, you can, and there's lots of evidence for that, but you can be out of an industry, particularly an industry in secular decline, like the traditional fossil fuel industry, and do fine in terms of performance. And our experience with over 25 years of managing money that's fossil fuel free is that it's actually, over the long haul, has reduced volatility. So the argument of you can't get out of a sector without sacrificing return and increasing volatility is a flawed one when you look at the data. So just sort of one of the reinvestment opportunities when you've divested from fossil fuels is to look to be in more companies that are driving energy efficiency and better environmental outcomes. And I'm not going to go through all the 7 pillars, but we can certainly you can find this information on our website. So just sort of going back to why social or sustainable, responsible impact investing. We believe, and I think it's been proven out, and we'll go to the next slide about evidence, but that environmental, social, governance are giving you important information, material information that, combined with financial analysis, is going to provide improved performance and provide the opportunity to have positive social and environmental impact. So when we're looking at opportunities for investment, we're still looking at all of the same things you're looking at any financially focused investor is looking for: attractive valuation, the strategic position. You're looking for the quality of the management team and the board, but at the end of the day, you're also looking for them to have strong environmental, social, and governance profiles in order to be an attractive buy. So just a couple ESG studies that we list, and the most interesting to me was the university, the study on the bottom from 2017, which was an 88-year-old study, because one of the arguments we keep getting into is, well, we haven't, we don't know if over long periods of time you can be divested. And they did a study just sort of looking at, if you had removed fossil fuels from your portfolio for 88 years, what would have happened? And again, found there was no reason why you couldn't. And it did not reduce risk-adjusted returns when you remove the fossil fuel industry over obviously many market cycles. Just some key advocacy tools, and want to talk a little bit now about how does one have impact in the public markets. One of the discussion points we get often is, well, I don't understand how you can invest in the public markets and have any real influence or impact, particularly if you're a small investor. The answer is, you have to be invested in a way in which your shares are being actively used to try to change the behavior of companies, improve the behavior of companies. That's done certainly through simple tools like making sure you're voting your proxies and voting for proposals that are supportive of improving environmental, social, and governance at companies. But you also have, if you own over $2,000 worth of a stock for more than a year, you have the ability to actually be the filer of a shareholder resolution. And so if you're not participating actively in this process, you can move your assets to an asset manager that will enable you to, or use an outside service provider. That's there are several nonprofits that can help with filing shareholder resolutions. But you want to be actively conveying to the management what you'd like to see in terms of changes in behavior, and that does, I can tell you, effectively change. You do see changes in behavior. You do see outcomes that provide for evidence of very positive impact on a lot of key issues. And this is just not all of the issues we work on, but just simply some of the key issue areas we've worked on over the last 38 years on climate, basically curbing climate change, ESG disclosure, Indigenous people's rights. And so I'm going to go through now just a quick list of some of the areas we focused on and where we've had success. And on sustainability reporting, we've had great success of encouraging companies to be transparent and to release more information about how sustainable their business model is and what they're doing to improve their sustainability. Workplace diversity, we've worked on a lot of work on trying to encourage companies to improve the diversity of their workforce, the diversity of senior management, and of course the diversity of the board. And all of those have been demonstrated to show better outcomes for shareholders, better outcomes in terms of overall decision making. So I'm going to stop there, and I'm going to just sort of a couple other comments I want to make, which is, well, I was asked if there were ways in which individual investors or retail investors could invest in impact investing in the public markets. The answer is there are a lot of options that are available. And what I would suggest to you is that because this has become very mainstream, very popular, we are seeing a lot of product that is not, let's perhaps less than how it's labeled. And I would suggest to you to make sure you look very carefully when you're purchasing funds that are labeled ESG at what's inside. Look at the names that you hold. Ask yourself whether or not this is actually what what you think you're getting. So if you're very concerned about climate change, very concerned about environment, and you pick a fund that says that's what it looks at, and you look inside and it holds ExxonMobil or Chevron, then they've done something wrong with their methodology, and you shouldn't invest in it. And there are a lot of examples of that, unfortunately, now that have come that are out there in the public markets, but there are plenty of great funds. AsYouSow.org actually has a great screening site where you can go ahead and put in issue areas that matter to you, and it'll actually identify funds that are the right match for you based on your concerns. So with that, I'm going to turn it over now to Shawn, and then we'll be opening it up to Q&A after our presentation.
Thanks, Matt. I appreciate it. And thanks everyone for tuning in. I also want to say I've known Matt for a long time, and it's a great honor to be speaking with him today. He's a true leader in the impact space. So Matt, it's really nice. So I'll start just a little background on myself. I'll give you a quick overview on the firm, and then dive in a little deeper. So specifically around myself, graduated from Syracuse University, went to New York City, and where I did 15 years, I did international institutional equity sales. So what that is basically selling stocks to banks overseas, in Europe, in the Middle East, in the Scandinavian, Nordic regions. So selling research to those different folks. I did that in New York City, and then I moved to Memphis, Tennessee. And then I did that for a company called Morgan Keegan, and then eventually moved to Atlanta, Georgia, where I am now, and I put down roots. So I did that for 15 years. And then how I got into the other side of the business, it was around 2007. and I had a new client that was in the bioplastic space. So I really didn't know what bioplastics were at that time, but bioplastics, basically, I think folks now really know what they are. They're a substitute for petroleum-based plastics. They're plastics that'll compost. And I remember going into different investment offices in Switzerland or in Zurich and going to see the portfolio managers. And I always had this bioplastic fork. And I'd say to them, this bioplastic fork, it'll compost in your backyard. And at first I was like, I'm not really sure what that means, but they didn't really look at me funny. So what they would do is they'd say, Shawn, that's great. Give me that fork, right? And they're going to say, I'm going to compost that, because obviously in general, Europeans live a more sustainable lifestyle. So we took that company, it was a public company, and we raised around $15 million for the company. And I remember getting on the plane and thinking to myself, this is interesting, because in the past it was all about making, rich people richer, there's nothing wrong with that, right? But if I could make money and do something in my mind that's, also good for the environment, for society, etc., why not, right? So then getting off on the plane, I basically put down my business plan, and then I got back, home, and then I founded a firm called Sustainable World Capital. And Sustainable World Capital, the goal was to raise capital with European investors for different public companies. And then it kind of morphed. And then I met my partner, Michael Welshel. He lived in Chattanooga, Tennessee. I lived in Atlanta, Georgia. We met through a mutual friend, and our friend was like, hey, you're the only people in the South that are actually doing this, so you guys got to meet. And then we basically formed Big Path Capital, right? And we formed it around, we also, and Matt knows this, we do an event called the 5 Fund Forum. This is an event that we've been putting on for 13 years, that we started in Europe. So what it is we take 5 private equity funds, we take them on a 3-day roadshow across the country, and we'll introduce them to about 150 limited partners, basically people that invest in funds in 3 days. So we really started the company around that, and we're still doing that. So let's fast forward 15 years doing on the equity side, then switched over to private equity, and then a quick just overview of where we are now with Big Path Capital, right? So Big Path Capital, we've been around again for 13 years. We're a niche investment bank focused on impact and sustainability. And like Matt said, people look at impact investing differently. So how we look at it doesn't mean it's the right way, because people have different ways to define it. Is we have a mantra called smarter money. So basically what that means to us is we're looking to represent best of class impact companies and funds that we say they maximize impact, there's maximized return, and there's no trade-offs. Because a lot of people in the impact space have this myth where people say, hey, if you're doing good, you can't make money, which I always thought was kind of makes no sense to me. But that's just the myth that's out there, right? So that was basically the thought process behind our firm. And then we do 4 different things. So I'll just give you a quick flavor. So first, we're an investment bank for impact and sustainable companies, growth companies. So on that side, we'll do your typical investment banking type engagements, raising capital, M&A, sell side, et cetera. And we've worked on about 50 or so different engagements. So that's one side. Second side is working as what we call as a placement agent for impact and sustainable private equity funds. What that means in simple English is we help private equity funds raise capital from limited partners, which are family offices, foundations, other institutional investors, et cetera. And we've worked with over 180 of them, more than any other group in the world. So we do the companies. Again, we're only on the private equity side. So we do the companies, we do the funds, and then we do convenings. Matt's spoken at some of them. So we've done around 50 impact investor convenings over the years. We've had over 3,000 impact investors attend those. That's another great way to get the word out and to network and kind of do peer-to-peer learning. So we'll do the companies, the funds, the convenings, and we also have an online investor portal. So that's a quick just snapshot on us. Just where has impact investing gone to? It's just interesting. I would even say in the last couple of years, and again, doing this for 13 years and Matt doing this longer, it's really been, I would say in the let's turn back the clock 2 years ago, right? If you run around New York City, Zurich, Hong Kong, wherever, you say impact investing, you have a company or fund with you, you go in to see investors. I'm slightly exaggerating, but they would say, that's nice. Thanks for showing this to me. How much money am I going to lose? Get out. Okay, that was the mindset. However, it's almost done a 360 in essence, that all these firms now have to have something, some kind of answer. They have to have something on the menu, basically. So you're seeing a whole new switch in this space where all these new groups are coming on board. A lot of the bigger names, the KKRs, the Bains, the Carlyles, everyone has their new impact initiatives. So it's definitely an interesting time in the space. It's definitely growing. And then regards to currently, right? Obviously, we're all in the middle of this COVID storm situation, whatever, however you want to call it. So the question is, once we get through this, and we will, because every single pandemic ends at some time. So this too will pass. What is it going to look like, right? So we're out also talking to people constantly, investors, what are they thinking? So I think, of course, I'm a little bit biased, but I think this impact investing is going to be even more important once we come out of this difficult time period for everyone. So I'll stop there.
One quick question to prompt you. For those
Yes,
who are new to impact investing, how would you suggest they get started?
Yeah, I think there's a couple of different firms that have some good resources. Again, Matt's more on the public side. I'm on the private side. So if you go to the GIN, the Global Impact Investing Network site, they have some good overview on the space. If you go to Tonic, that's another association that has really a good information on the space. Another great event that a lot of newer folks go to is an event called SOCAP, S-O-C-A-P. That'll happen hopefully in October. It's a great kind of way to get ingrained in what's happening in the whole impact ecosystem.
Thanks.
Matt, you want to add on to that, or?
Yeah, I mean, there's in the space in general, US SIF is a good place to go for just information and resources, ussif.org. And I mentioned As You Sow already, asyousow.org, Green Money. I think it's Green Money. I don't know if it's .org or .com, but Green Money Journal. If you just Google search Green Money Journal has another rating service, but there's a number of places to start out just simply looking for information. And certainly there's resources on our website that are a number of white papers. And our website is trilliuminvest.com.
And a related question to that, do those sites help with evaluating the quality of those funds, both financial and their social impact?
Green Money Journal has always done a good job of sort of ranking based on passing a certain threshold level of being responsible and sustainable. And the asyousow.org site is actually really good in that it allows you to go in and specify issue areas that really matter to you and then do searches on them. And US SIF is more informational background and connection to more white papers and information on the space, including the trends report, which talks about the overall industry.
Yeah, there was a question. I think we probably can go to Q&A. There was a question that I saw in the chat about, will the slides be shared? Yes, the slides will be available afterwards.
Yeah. Oh, I should just add that Tonic, which was referenced by Shawn, and I'm also a member of, has got a great tool available that's for free to evaluate a portfolio for impact. So that's another site that people should go to, and so that's toniic.org.
Okay. Other changes that you see as a result of this COVID crisis? I know Shawn shared his, Matt.
Yeah, the biggest change we're seeing is a renewed interest and focus on the S in ESG. The recognition of the fact that companies have to be focused on the relationship they have with their employees and how they're treating their employees and how important that is. And sort of that's true through supply chain. So it's also true with suppliers and how the labor standards of suppliers. You're seeing an awareness now of how important that is, of just in the way in which they're treating their employees, particularly with the protests you're seeing right now at the Whole Foods as an example, where the old Whole Foods, we would have been shocked to see a labor protest over labor standards, but under Amazon, apparently it's not getting better. And that doesn't surprise, I shouldn't say it's surprising how bad it is. One would hope that by putting pressure on these larger public companies, you can get better behavior from the companies toward their employees. But I think there is a major shift or at least awareness now of the significance of a lot of the social impact issues.
Second question, can you please advise on the linkage between with policy and regulatory risk with impact investment?
I'll go first on the mat and then I'll give it to you.
Yep.
When we look at companies, right, I should have said this before. When we look at a company as basically they're an investment banker, right? We're looking at these companies like you'd look at any other investment, right? Is it a good investment? And does it have that's first, it's a good investment. Secondly, for us, it has to have some other social or environmental benefit. So as a firm, we're not looking to companies that might be benefiting from it. They have to stand alone on their own, just as us as a firm, right? So if there's solar incentives or whatever it is, just us as a firm, we're not going to look at those different things. Doesn't mean there's not great opportunities, but it's just us as an investment bank. We won't look at that. But I'll let Matt touch on it. He probably has some more info on policy side.
I'm not sure whether the questioner was trying to get at risks of policy change, but what's happened in the past is we've worked very diligently with other players in the industry toward trying to make sure that policy was constructive toward encouraging sustainable business models, disclosure of environmental social governance data, standardization of that data, right? And unfortunately, in the U.S., from the context of U.S. regulatory, all of that's been turned inside out and mostly been torn apart by the federal government, where we've seen successes on a state level in the U.S. And of course, we've seen great success globally, so that there's a movement toward standardization of ESG data, disclosure of ESG data, and then if you're talking about investing in a company where there's not good environmental social governance profile, your regulatory risk is very high operating in a global context. And so I would think over time, you're going to see directionally, particularly coming out of COVID-19, that there's going to be a lot more movement toward tightening regulation around these standards. And certainly that's going to put companies that have behaved badly at risk.
Interesting. Especially in the context of emerging markets, where is impact investing urgently needed?
Shawn, do you want me to take that?
You can start.
I mean,
go ahead. Yeah.
Impact investing dollars are desperately needed in a lot of the emerging markets, and you also oftentimes a lack of good disclosure. Complex place to be trying to do more impact investing because of some of the lack of as much disclosure, particularly in the public markets. In the private markets, it's a little easier because you can look at a tangible a specific project or company that you're looking to invest in. And so when we're talking about debt financing, we can find tangible projects that we're supporting in the emerging markets. But I would say in the public markets, it's a more difficult place to do impact investing, and you might not have as much influence over a company's behavior based on their particular regulatory environment.
And I would say when they say needed, right? I don't think people should look at impact investing as some panacea or substitute for I can't say that, philanthropy or the government. So I think it scales with companies that make good business sense. So it's more flipping it on its head and going, where are the great opportunities? There's definitely great opportunities in emerging markets, right? So, I mean, here's just the truth of it. Doing this for a long time, you don't have that many investors or impact investors that are like, hey, I'm going to substitute and not make money and a trade-off, okay? People say that lots of times. I can tell you just from experience, and I've been in a lot of small rooms with people talking about impact investing, and they could talk about that, but when push comes to shove, they want to make money and do good. So I'm not sure what the questioner was saying, but it's needed. It's got to be a good opportunity to make sense, or else it could be philanthropy, it could be the government. There's all different kinds of capital that could come into different situations that there's definitely need, across the globe.
Okay. Next question, it's related to the previous one, but how do you measure impact? And what challenges do you face in measurement?
In us, for us, what we are attempting to do is measure the impacts we're having with the changes in behavior we're getting from public companies. So we actually are documenting our engagements, and last year it was over 350 engagements with public companies, and only 48 roughly went to actually filing a shareholder resolution, which means we had success in getting, basically most of the companies are responsive to us just a dialogue about the changes we're looking for. And even in the 48 where we filed shareholder resolutions, over half were withdrawn successfully, meaning we were actually able to get the change we were looking for, and we're able to withdraw that proposal successfully. That's how we're handling our public market measurements of impact, and the privates. I'll let Shawn talk about the way in which they're looking at it from the private side.
Sure, thanks, Matt. And I would also just want to kind of clarify the difference between me and Matt, besides him being so handsome and me not, is that he had Trillium, and they have different funds, right? And they're amazing funds, right? We're more a third-party marketer. So we don't have any, let's call it in-house type of product, where Matt has a specific offering, right? So we're trying to represent, we're like a talent scout. We're going out and trying to find the best companies there are, impact companies and funds, and then represent them, right? So we always say, when it comes to measurement, we are not the impact police. What we will do is, it's more on the company or fund that we're representing, how they're going to measure it. And there's multiple different ways. It's also, when push comes to shove, it's really we're dealing with private investments, not public. It's a different animal than Matt's, right? Totally different animal. So we're dealing with, where he might be dealing with thousands of investors, we might have a company or fund, and there might be 3 or 4 investors. In some cases, there'll be 1 investor. So really the impact is really around what that investor wants. So it's almost like the impact is in the eyes of the check writer, right? So some foundations might say, hey, we're really interested in education. Some might say we're really interested in the base of the pyramid, whatever it is. And then I would say our job is to bring people a diverse group of opportunities, because the truth of it is, there's a wide spectrum of investors. Some will say they're more impactful. Some will say that they just want to check a box. So we're definitely in a different spot than Matt. So he's going to dive deeper, because again, he has his own internal offerings.
Got it.
Does that make sense?
Yes. Okay. next question is the current crisis propelling the move to impact investing in ESG? And is there a sense in joint marketing impact investing to investors this way these days? Well, I think that's sort of what you do, correct?
Yeah, and there's a lot of effort, and this is one of the interesting things of the field, I would say, of those who've been around doing ESG integration and impact investing for a length of time, is that there's been a lot of effort to try to do support of the sector in general and promoting the sector in general. And so it's not unusual that you will hear, one of us is talking about some of the other organizations and how they fit in the ecosystem and why it is you should be looking at a lot of players. So I think there is a lot of joint marketing efforts. I do think the current crisis will lead to people looking at what did well through the crisis, and that we're likely to see that those players that were looking at incorporating environmental social governance into the investment process will end up with portfolios that were more stable through the crisis and ended up coming out of it stronger. And so you're going to end up seeing asset flows in that direction. And that's certainly there was just a Bloomberg story that actually was about that very topic. It said ESG was seeing the greatest inflows, second only to gold as an investment through this crisis. So people were fearful and they were fleeing to gold, and they were then buying ESG strategies. So somehow it's being perceived as a flight to safety or a flight to quality. And I think that's actually an accurate reflection of how you should define it from a financial perspective. Is ESG is showing to be a risk mitigator and is showing to be a good place to go for safety in troubled times. So
Interesting.
And I would just add something on that. I mean, the other is also those other factors, just people's mindsets, right? Now, if you think you can do money, you can make money and do good, or somehow do harm when you get through this very difficult time period, people would rather put their money towards things that are going to do good. If they can make the same or sometimes even better return, why wouldn't you? So I think people go through a very stressful situation, and you kind of look around and go, what am I doing? Right? So I think you're going to have a lot of people that are going to be looking more at this just because so many things are going on in the world. It's super stressful, and they kind of say, what am I doing? And a lot of people have already come to impact investing from that. They say, hey, I had a career doing this, but this looks like a better way. Why wouldn't I do it? So I think that'll exacerbate.
Interesting. Are there impact investing opportunities with early stage non-public tech companies, including biotech?
I'm going to let Shawn answer, but the answer is yes, and you should talk to Shawn about that.
Well, for sure there are. That is not an area that we look at. We are focused on our growth companies, because you kind of have different stages as investors. You have let's call them the angels, looking to raise maybe $1 million or less. And then when you get to an investment bank, it only makes economic sense to use an investment bank. We're looking at engagements from, let's call it 5 million to 100 million. So it doesn't make any sense on either side to get involved from where we sit until that time. However, for sure, there's plenty of opportunities that are in that kind of, let's call it angel space. It's just not an area that we shop around in, honestly. I'm trying to think of resources like there's an association, it's slipping my mind, that merged with SJF. Matt, what's the angel network?
Wait, the angel network you're talking about?
There's angel networks out there for impact.
SVC, SVC, which is, Investor Circle is now part of joined Social Venture Network to form Social Venture Circle, and within there's a network of angel investors that are all focused on impact. Yeah.
So Social Venture Circle, that would be one resource to look at. So they're definitely out there, and definitely interesting. but from the founder of an investment bank, that they don't make business sense for us until they get to a B or a C or whatever.
Got it. To Shawn, where do you see the gaps or opportunities today in the environmentally focused investing landscape? Is it demand side, supply side, market making side?
It's a good question, right? I think that the whole ecosystem, like Matt was saying, is being built out, right? And I'm getting a little technical, but like, let's look at private equity funds, okay? You have, think of two barbells, but now they're starting to get filled in. So one side of the barbell, you have these billion-dollar impact funds, which are usually, they're not funds of funds, but they're other brand names like a KKR, a Blackstone, a TPG, et cetera. These are billion-dollar funds. And on one side, they'll do impact investing. On the other side, they're going to do other types of investing. And then on the other spectrum, you have more, let's call them pure play impact funds. Like we were mentioning a fund that's, Matt knows, SJF, and there's a whole stack of funds. And those funds are kind of our bread and butter, right? And those funds now, these other ones on one barbell are $1 billion funds. These other funds they were 50 million, 100 million. Now they're 200, 300, 400. So they're kind of catching up with these bigger ones. So the whole ecosystem is being built out. So so the next is you have to have the investors. So now there's more and more investors coming in from all different sizes. So I'm going back to the question, but that's basically the two barbells that you have on the impact investing fund side. So they're asking, what's the missing link in the middle? It's all getting built out. I wouldn't say there's anything missing. It's just going to take time to mature. Did I duck that question? Matt, do you have another answer for that one?
No, that was fine.
Yeah.
And
Okay. The next question or opinion is from someone who said, I worked in impact investing for 2 years. My view is that it's a good tool to raise more funding from foundations and high net worth individuals, but its impact on the ground is doubtful. Do you agree?
I'll take that one first, and then Shawn can add. But there are plenty of examples of using the language, co-opting the language, without any concern for true impact. And so you've got to look through and ask the question of what's the methodology? What do they mean when they talk about impact? What are they ending up in? And, and I referenced the one, I mean, there's a very highly marketed impact index product now that holds both ExxonMobil and Chevron. And I will say to you right now, you cannot be looking to have positive environmental impact and own ExxonMobil or Chevron. It's not possible. So if the product is not designed to try to have positive impact, then yes, that's all you're doing is, the equivalent of greenwashing, impact washing, and it happens and it's happening. And I, know of, that's a tough one for us, right? Do we call out the players who aren't doing it credibly? And we've got a lot of discussions in the industry amongst ourselves about, do we call them out? And the answer is we generally don't spend a lot of energy on that. Although when there's something really egregious, we will call it out, as we did when we saw a launch of a fossil fuel free index product that was 7% fossil fuels. We made sure we made noise. And they rebranded it fossil fuel reserve free and kept their exposure to the fossil fuel industry. But I just point out, you've got to be, it's buyer beware. Be making sure you're looking through, because there's an awful lot of good marketing teams where that's their effort, is to market product, not necessarily the integrity of the product behind it. And you've got to be got to be on guard and look through it is all I can say. I mean, but the answer is yes, you can have positive impact. You can have positive impact in every asset class. It's an intentionality that has to be there, and you've got to be able to look through and understand what do they mean by having positive impact and what tools are they using. But yeah, we see it all the time. We see product packaged as an impact portfolio. And I can't tell you how many times I've seen, and Shawn, you'll appreciate this, I've seen people come to me from a wealth management shop and they'll say, I'm in their impact solution, right? I'm in their impact solution. And I look at it and I'm like, you're in broad market index funds for the public market exposure. That is not impact. That is actually counterproductive and is actually working against what you're trying to do. But then they've gone and put them in a couple of private funds or in some, promissory notes for root capital. And they've called it their impact solution. And I'm like, well, you're having really nice impact with this 5% of your portfolio, but you're causing harm with the rest of it. So no, they did not give you an impact solution. They gave you a marketed impact product that is not impactful or not positive. It's having impact. It's not having the positive impact you want. So Shawn, I'll turn it over to you.
Well, I'll look at it. Yeah, I agree with Matt. But I will also look at it, it makes me laugh a little bit because we're at a point where people actually do that, right? So when I started and Matt started, people wanted to run away from impact investing, right? They kick you out if you said the word impact investing. They say, get out of here. I don't want to talk to you. So the fact that now it's changed so much that people want to use it to greenwash or whatever, yeah, that means the space is growing. Right. So, but of course, every case is differently, and that person had that experience, and I would agree with Matt. But it's also kind of a canary in the coal mine, saying, "Oh, wow, now people really." On the flip side, people really care about it, or are interested in it, or they look at it before they didn't look at it like any opportunity. So that's my take on it.
All right. We're coming towards the end of the hour. I want to ask if there are any more questions out there from the audience. I don't see any popping up. I'd like to ask Matt for kind of key takeaway messages.
I would just say it is possible to have positive impact, as I mentioned, and what I would in every asset class. But what I would say is the ability to have, the challenges we face still are largely inertia and a belief system of there being a required sacrifice and return in order to have positive impact in the world. And certainly from experience, we can tell you that's not true, but there's still, I think, an awful lot of people in the industry who that's their starting point. And so you're getting resistance always. And you just simply, if you're working with a financial consultant and they don't understand and they're telling you can't do it without sacrificing return, the answer isn't to continually hit that person over the head. It's change your financial advisor because there are people who do get it. And that's the biggest frustration I have is people saying, oh no, I talked to my Merrill Lynch financial consultant and they told me it can't be done. And I'm like, that's not the answer. You can get it done, so anyway, so that would be my only added advice.
All right.
Finding the person who can help you.
And Shawn?
Yeah, I would throw in kind of similar to what Matt's saying, but kind of right now, the trend is your friend. This is the way the world is going. There's no turning back, right? People are not going to be all of a sudden become less sustainable, and millennials are not going to say, I don't care as much. So this is the way it's just going. Also, this is the way people are spending their money, right? They want to reward the companies or that work in these different ways. So this is it. So talking about Matt with the financial advisors, and I talk to financial advisors too, and I say, hey, you have a choice here. You can either use impact as a competitive advantage or a competitive disadvantage, because people are going to come in and ask for this, right? So you can figure it out, or you can say, oh no, this is silly. Like some people would say back when about the internet, oh, this is just a fad. This is not going away. It's just going to grow in society. And it's not just happening in the US, it's a global phenomenon. So I would also say I want to wish everyone good health. And this is a difficult time for everyone. I hope everyone's family is okay, but this will also, this too shall pass. And I just wish that everyone tries to do their best to look at it as a positive way they can.
So I want to thank very much Matt and Shawn for joining us and sharing their insights about how impact investors can work and in both the public and private markets. And with that, I think we're going to put this to a close. This is going to be available on YouTube afterwards. We encourage you who are interested to join SEAG, and hope to see you in May.
Thank you all. Bye-bye.
Bye.
Thanks for joining us. And for more information on how to connect with the MIT Alumni Association, please visit our website.